This is going to make me sound a little bit crazy, but hear me out. 1 Bitcoin is equivalent to infinity US dollars. For some people, this is a pretty difficult concept to wrap their heads around because they believe so hard that the US dollar is the only form of money that will ever exist. But in this video, I want to explain to you why 1 Bitcoin will be equivalent to millions, billions, or even trillions of US dollars at some point. Let's get started. The very first thing that I want you to take a look at is the debt of the US government. Currently, the US government is about $35 trillion in debt. It owes $35 trillion. The US government borrows as much money as it wants to complete whatever mandates it has. For example, if the US government has to pay Social Security or Medicare, eventually it will start borrowing money to do so. It's already borrowing money to pay the interest on this debt. On this site from the US government, we can see here that the US government is in $34.8 trillion worth of debt, almost 35 trillion. And we can see here that maintaining the national debt is costing the US government $868 billion. That's 17% of the total federal spending in the fiscal year 2024 so far. The US debt is growing so fast, it went from $403 billion in 1923 to $33.17 trillion in 2023, or $35 trillion today. We can see here that the US has always been in debt from January 1st, 1791. The debt just keeps going, and it seems like a lot of it is pretty much to fund wars. We can see here the American Civil War. We can see here that the first time the US went into debt was because of the American Revolutionary War. It grew even more by the conclusion of the American Civil War in 1865. We can also see below here that the Afghanistan and Iraq wars, the 2008 Great Recession, and the pandemic all boosted the debt significantly. We can see that this is about where the Iraq and Afghanistan wars started. This is where the great financial crash spending started. Again, another quick increase. We can see here that this is where lockdowns started. Quick increase again. The number just skyrocketed right there. There's a really important measure that's used to calculate whether or not a country can pay back its debts. So if you think of a country as a business, if you're going to lend them money, you only want to give them that money if they can pay you back. If they can't pay you back, then why would you lend them money? So if that business was making $100 a year and you lend them $1,000, it'll take them at least 10 years to pay you back. And that's if they gave you all of the dollars that they earned. But now let's say the business is making $10,000 a year and you have to lend them $100. It's much more likely that you'll get paid back. Countries can be looked at in a very similar way. The GDP is the gross domestic product. It's the total monetary or market value of all finished goods and services produced within a country's borders in a specific time period. When you look at this chart, every time debt to GDP drops, meaning GDP grew or the debt dropped, the chart moves down. Every time debt to GDP increases, meaning that either the debt increases or GDP decreases, it's mostly the debt just increasing. We can see that the chart goes up. Right now, the US debt is 123% of GDP. There's no signs of a decrease in this growth. Since the Federal Reserve can print US dollars at will, and it can buy all of the US government debt on the open market, the US government basically has a blank check for how much money it can spend. The scary part about all of this is that the US government is borrowing money from its citizens by telling them that they'll be financially supported in the future. The biggest investor in Treasury securities, which is the US government debt, is the Social Security Administration. This means that a lot of US citizens are depending on the US government to support their financial future, and what they're doing is they're buying the US government's debt. The US government is borrowing from these people's future to spend today. Now, if this money was being used to invest, for example, to build businesses or to help people to improve their education, maybe it's different. When you build businesses, you're probably going to get a higher return over time and you'll be able to pay back that money. But in this case, the US government is borrowing a lot of money to fund destruction and death. But in a way, as long as this death and destruction is kept outside of the US, companies in the US and the economy benefit. For example, there are companies like Raytheon. This company produces aircraft engines, avionics, aerostructures, cybersecurity solutions, guided missiles, air defense systems, satellites, and drones. It's a large military contractor, and it gets a significant portion of its revenue from the US government. This company's stock has always gone up. I'm not concerned with how much it's gone up. I'm more concerned with the fact that people are able to invest in this. They're able to invest in death and destruction, and part of this profit comes directly from the US government. Okay, so back to the debt. A lot of people think that this debt can just be wiped clean. We can just wipe the slate clean, get rid of this debt, tell the people who it's owed to that they're not going to get paid back. They think that if this is done, then the US dollar will gain strength, the US government will be more powerful, all that stuff. But let's look at who owns this debt. We can see from this chart here that $27.61 trillion are held by the public, and $7.22 trillion of this debt is held within intragovernmental holdings. Intragovernmental debt is held by federal agencies like Social Security. On the other hand, a large majority of the public debt is held by foreign governments, and the other part of it is held by US banks, investors, the Federal Reserve, state and local governments, mutual funds, pension funds, insurance companies, holders of savings bonds, just a bunch of institutions and individual investors. So this debt is held by the public. So if it's wiped, what happens? Everybody who owns this debt loses out on the return on that debt. They lose out on the principal, and it means that the entire financial system can pretty much collapse. The reason why I'm talking so much about the debt is that the US government can borrow as much money as it wants and spend it into the economy. The US government is essentially competing with everyone else to buy goods and services and all these resources. So when the US government contracts a company to maybe make drones or to work in a government job, it's competing for labor and raw materials. Instead of using this money to build homes, grow better food, or give more people access to higher education, this money is being used to fund death and destruction. The amount of money that can go towards this is unlimited. The US government can borrow as much money as it wants to, as long as there are buyers for that debt. The Federal Reserve has now become the buyer of last resort. What I mean by this is that if there's no demand to buy US national debt on the open market, the Federal Reserve does it. What this does is it keeps the interest rate on the US national debt low, so the US government can keep borrowing more and more money without having to pay too much more in interest. But this is compounding over time, and the number is just growing. Like I said, the US government is now paying almost $1 trillion a year in interest alone. And where does this money come from? It comes from either taxpayers or it comes from borrowing more money. In a way, the US government is using a credit card to pay off the balance on another credit card. It's using borrowed money to pay back the interest on the debt that's already accumulated. And we're still using and assigning value to the money that the US government can borrow and create out of thin air. So back to what I was saying about Bitcoin. Eventually, Bitcoin's price will be infinity US dollars. There's no limit to how many dollars can be created. The number of dollars will increase forever. What we see here is the M2 money supply. We can see the definition of M2 money supply here, but here's an easier definition. M2 is the US Federal Reserve's estimate of the total money supply, including all the cash people have on hand, plus all money deposited in checking accounts, savings accounts, and other short-term savings vehicles such as certificates of deposit, CDs. This number just keeps going up. It went from $286.6 billion in 1959 to $21 trillion in 2024. We can see how quickly this number increased in 2020. It went from $15 trillion all the way up to $18 trillion. And this is within months. So what's going to happen in 20, 30, or even 40 years? I personally think in 20 or 30 years, $21 trillion is going to be a rounding error. Just like right now, $286 billion is a rounding error. The growth of the M2 money supply is just going to accelerate over time. In 1933, when gold was about $20 an ounce, who would have guessed that gold would go to $2,400 in 2024? Gold is so valuable because it's scarce in terms of US dollars. The number of US dollars can increase forever with the press of a button. On the other hand, the amount of gold in circulation only increases if you put in the time and effort to mine it. Since 1933, the supply of gold has been a lot less than the demand. But if we zoom into gold's price, we can see when this started happening. In 1971, Richard Nixon severed the link between the US dollar and gold. After this happened, the US dollar was backed by trust. Before this, the US dollar was backed by gold, which is a scarce commodity that takes time and effort to produce more of. And because gold is more scarce than US dollars, we can see that the price skyrocketed. The amount of gold in circulation will always increase slower than the amount of US dollars in circulation. Gold's features have also made it one of the best bearer assets to ever exist. When you hold gold, you know exactly what you own. If you've confirmed that the gold is real, it's not gold-plated tungsten, you know for a fact that you hold this commodity and nobody can change it. But what having a physical bearer asset did was it slowed down the economy. We couldn't spend our money quick enough. For example, if you wanted to pay someone, you'd have to physically go to them and give them this bearer asset. So we started using things called representative money, like bills and coins, because bills and coins are easier to move around, and you'd probably feel a lot safer carrying around a $20 bill over an ounce of gold. And this convenience is one of the reasons why we moved from physical gold to paper money. At one point, the US dollar was backed by gold, and you could exchange your US dollars for any amount, whatever the dollar amount of the bill is, you can exchange that for gold. But the issue with this is that paper money can be created much more easily than physical gold. Humans are naturally greedy. We're always going to do something that makes us more money or makes us more prosperous, especially if it doesn't cost us a lot of money. What banks started doing was they started taking deposits of physical gold and they started issuing more dollars than they had gold in their possession. The reason why gold being a bearer asset is so important is because you could take full self-custody of it and you never have to rely on a bank or a financial institution to hold it for you. If you wanted to take gold from a bank and put it in your own personal safe at home, you could. Nobody can stop you from doing this. Nobody can take it from you unless they know that it's there. Nobody can track that asset. And that's what scares governments so much about bearer assets, bearer instruments. Investopedia did a great job explaining what bearer instruments are, but they put in here that it has to be a fixed income security, which is, from my experience, not true. You can see here that stocks can be bearer instruments. You can have stock certificates that people can hold and take full self-custody of. Of course, gold is also something that you can take self-custody of. It's a bearer instrument. You can also see here bank bills, drafts, and certain types of commercial paper are also bearer instruments. A bearer instrument is something in which no ownership information is recorded and the security is issued in a physical form to the purchaser. So if you were to buy a bond, a bearer bond, you would get a physical certificate that doesn't say your name, it doesn't assign it to you, you just get a physical certificate. Anyone can hold this bearer instrument. So for example, you could give a stock certificate to your kids, your grandkids, whoever you want, your friend, your family. You could use it to pay for something. If somebody finds a gold coin on the street, of course, they can take it and they're the assumed owner. Nobody can really track who owns that gold because that gold can be melted down and you can turn it into another coin, which has no engravements. The same thing applies for cash. So for example, if you were to find a $50 bill on the ground, you can take full self-custody of it and nobody can really question you because it's not assigned to someone. Nobody is assigned the serial number on that $50 bill. Issuers keep no record of who owns the security, which means the security is traded without a record of ownership. Ownership is transferred by simply transferring the certificate. So you give the physical certificate to someone else and they own it. Same with gold. If you were to give somebody a physical gold coin, or if somebody were to come to your house and take that from you forcibly, of course, they own it now. You can't do anything about it. The US capital markets have made it illegal to issue bearer instruments, which are, in this case, bearer bonds. And this has been illegal since 1982. The reason why this is so special is because nobody can stop you from holding a bearer asset. For example, if you have a gold coin, nobody can track it and nobody will know that you hold that gold coin. At some point in the future, you can exchange it for goods and services without anybody else knowing. You can trade it with a merchant or any other individual. You can give them that gold coin. Nobody else has to know. There are no transactions. There's no credit card processing. There's no processing fees. You give that coin to someone else. They give you whatever you want. That trade is done. Now, this is scary for governments and financial institutions because it basically eliminates them from the process of trading and commerce. If I wanted to give you a gold coin and you have a car that maybe you're willing to give away for that gold coin, I can take that car from you. You can take the gold coin and we move along with our lives. Now, a car may not be a good example because of the VIN and all that stuff, but let's even think about shoes or food, whatever you want. If we start trading like this, it gives us the power to trade without having to deal with interference in the middle. Credit cards work so well for financial institutions and governments because we know for a fact that a transaction has happened. And if governments want to find out if a transaction happened, they can go to a financial institution and they can find out if it happened. So every transaction in the current financial system has a trace unless you're using cash. For most people, 90-95% of their transactions are credit card or debit card. Bitcoin is a bearer instrument. Of course, your coins can be bought from an exchange, but you can also buy Bitcoin from peer-to-peer exchanges. You can buy non-KYC Bitcoin where nobody knows that you own it. This is the way that Bitcoin is built. It's just built to be something that anyone can hold without anyone else's permission. You don't need to sign up with anyone. You don't need to sign up with a financial institution. You don't need to make an account. You set up a wallet, accept Bitcoin, and now you have that Bitcoin. It's all yours. You can do whatever you want with it. If you want to throw the private keys to that Bitcoin away, you can. Nobody can stop you from doing this. On the other hand, let's say, for example, you pass away, your money is in a bank account, you have no heirs, you have nobody who can take that money from you. Who gets that money? Is it the government? Is it the bank? With Bitcoin, if you were to pass away, that Bitcoin goes with you unless you've told other people that you own it and you've given other people access to your private keys. Now, the reason why this is so special is because anyone can trade any amount of Bitcoin for any amount of anything else that they want. For example, if someone's willing to sell one Bitcoin for 1,000 US dollars, they can. But if there are no sellers and buyers really want to buy Bitcoin, the price can go up forever. The amount of Bitcoin that can be created is limited. There's no way to increase this past 21 million. If you were to own, let's say, 1 million Bitcoin and you never want to sell them, that means that those 1 million Bitcoin are never going back into the economy. It also means that everyone else has to fight for the other 20 million Bitcoin. As more people figure out what Bitcoin is, they're going to want to own it, they're going to want to hold it forever, and they're going to want to own more and more over time. To get Bitcoin, you can produce anything of value. You can create food, you can create products, you can create services, whatever you want. You can build houses. You don't necessarily need to trade US dollars for it. You can now use Bitcoin in the place of the US dollar for any transaction that you want to. Now, keep in mind, most people haven't figured this out yet. Most people aren't doing this because they expect that the Bitcoin price will continue to go up forever. They expect that it'll be worth hundreds of thousands, millions, or even billions of dollars. The reason why Bitcoin is going to go to these numbers is because if nobody's willing to sell, and this is a bearer asset that nobody can create more of through fractional reserve banking, they can't manipulate the system to create more supply, the price has to go up in order for sellers to come to the market and sell what they have. Since this is a physical asset that you can take self-custody of, people can just move it around within their own families, and that Bitcoin never actually has to come back into the economy. If the US dollar survives, they can use this Bitcoin to borrow US dollars against, and they can pay interest for doing so. And let's say they have a business and they're producing a lot of value, they can use that business income to pay off the debt that they have. What this means is that financial institutions may play a role in the future of Bitcoin and the future of the financial system, but maybe they won't have as big of a role as they do right now. With Bitcoin, you can lend money peer-to-peer. You can sell Bitcoin peer-to-peer. Anyone can buy Bitcoin from anyone else. There's a maximum supply of Bitcoin of 21 million, and all of it will be produced by 2140. And on the other hand, the US dollar can be produced at will forever. There's no ending the supply of the US dollar. There's no way to stop increasing it. If we use the assumptions that the US dollar supply is unlimited, Bitcoin supply is limited, we know for a fact that the price of Bitcoin will always go up as long as people want more. 99% of people have no allocation to this. This is the best performing asset of all time so far. It will very likely continue to outperform everything else going forward, and everyone will want this. We're still so early. 94% of the supply is already issued and is held by people. If these people who hold this 94% of the supply don't want to sell, the price will just have to keep going up because, like I said, Bitcoin is a bearer instrument, and to get some of it, you have to convince someone who already owns some to sell it to you. I personally think that people will be selling houses, cars, food, everything that they can, everything that they don't own to have Bitcoin, because Bitcoin is the best way to store value for the future. Bitcoin gives you options for the value that you can consume in the future. So for example, if you own one Bitcoin today, maybe right now it's worth a decent car. In the next few years, maybe it's worth a house. And maybe in 10 years after that, it's worth 10 houses. Maybe it's worth a mansion. Because Bitcoin's value will continue to increase forever, there are people who will own so much of it and they'll be willing to give away some of it in exchange for whatever they need. Let's say food, they need transportation, they want to improve their lifestyle. They'll have to give away some of their Bitcoin in exchange to other people who will provide those things to them. Now, if the US dollar continues to survive, of course, what's going to happen is more and more people will borrow against their Bitcoin. Maybe they won't want to get rid of their Bitcoin. Maybe they'll just borrow against it and always just keep maintaining more and more debt, and the US dollar financial system keeps inflating and prices just keep rising. But even in that case, the price of Bitcoin has to keep going up because more and more dollars will be chasing the same amount of Bitcoin. Eventually, the US debt will go from $35 trillion to $50 trillion, to $100 trillion, to $200 trillion, to $500 trillion, eventually quadrillion dollars. All of this money in production and in circulation will be chasing Bitcoin. If the US dollar financial system can expand, all of this wealth can be taken in by Bitcoin. It can all be absorbed by Bitcoin. As long as people are willing to accept US dollars have value, Bitcoin's price will increase. Eventually, one Bitcoin will be equal to one Bitcoin because nobody will want US dollars in exchange for their Bitcoin. Because why would you want something that you can create out of thin air in exchange for something that you can't produce more of? So in conclusion, US dollars will continue to increase in supply. The amount of US dollars will never stop increasing. This means that all of this wealth can eventually be transferred into Bitcoin. It can be absorbed by Bitcoin. You can buy as small of an amount of Bitcoin as you want to. One Bitcoin can be split into 100 million Satoshis. Today, one Satoshi is a fraction of a penny. Eventually, one Satoshi will be $1. Then it'll be $10. Then it'll be $100. We're going to have to split Satoshis into even smaller units. But most people are going to keep ignoring Bitcoin. They're going to keep saying that Bitcoin is trash. It's a scam. They're going to ignore Bitcoin until it's $1 million and more. And if you don't want to be one of those people, watch the video on your screen right now.